I have 9 o'clock, so we will start. Basically, you can see that Silicon Valley is a fairly hot real estate market still. Santa Clara County is totally on fire, except for the expensive areas in the peninsula area, Los Altos and Palo Alto. San Mateo County is pretty much on fire. It's not on fire in the expensive areas like Atherton and Menlo Park, and also now in the north part of the county. But the bulk of the county in San Mateo County is also a hot market. That's pretty amazing considering what we've been through. So this is looking at the DUI, which is the single most important indicator, and the data is the blue line. And DUI, the lower it is the faster the market. DUI is how long it takes to sell all existing inventory. So you can see when shelter in place was announced, DUI increased, which was a slowing marketplace. Once we were able to show properties, it increased or decreased, which is an improving marketplace. The gold line is the 5-year median of the DUI. So that would be 15 through 19, which were all good years, and that's the median number. And then the red line is the ratio. So if we were having a completely normal year, the red line would be on top of the red horizontal line. You'll notice the red line is basically below the red horizontal line, which means there's less DUI this year than in those 5 good years, which means the market's faster now than it traditionally is. You'll notice a little perturbation here the last 2 weeks, and that's because Labor Day was as late as it possibly could be this year. And in the other 5 weeks of my benchmark, it was in the previous week. And so there just a fluctuation of the calendar, which is one of the reasons I do solely weekly and then 5-week data instead of monthly data. Now what we're looking at is the components of the marketplace, and this is on a weekly basis, all plotted against what you'd expect, the red line being the 5-year norm. And so what you're looking for is things that are out of the ordinary. And what you'll see is this gold line is out of the ordinary. And what's the gold line? The gold line turns out to be the number of new listings. So you had a large number of new listings this year, basically a week ago, which was basically because Labor Day was weaker later than normal. We had more inventory come on the market now, and now you can see we're coming down below because now we're having the impact of Labor Day, which was a week late. So this whole thing was essentially a shift. So that doesn't concern me. What's interesting, as the number of new listings came on the market here on the gold line, the number of new offers followed, going dramatically up a week later, which is exactly what you hope to see, because that means the demand is there to eat up any supply that happens to come on the marketplace. Other than that, the available listings, the blue line, is very close to normal, slightly above, but not dramatically. You can see here it was right at normal. Right now it's right back at normal. Just fluctuations, nothing to be concerned about. Closings, again, is basically falling right around the normal line. I do need to warn you just a little bit. This point down here is a little bit low. One of the things I'm learning is about 19% of the agents report the closings late. So when I'm getting the data starting at midnight this morning, not all those sales that happened on Thursday and Friday have been reported yet. So I actually multiply by 15%, which is still a little bit on the conservative side. And then I go back and replot them to get the data to be more accurate. So we're comparing apples and apples in the long term, because historically I did not look at this macro data, 1 week combined data. And so that was all old data, having plenty of time for people to report the closings. Now what we're looking at is the magnitude and frequency of overbidding. This line down here, the bluer line, is the frequency. This is how often people are overbidding. And you can see it's somewhere around 58%. It's been fluctuating. It went down, and then back up. So the trend is generally up. But if you come up here to the magnitude of overbidding, you can see that 2 weeks ago was the peak, and it's really hard to see, but right underneath my red arrow, red dot, is where the peak is. And then you can see the last 2 weeks it's come down. Basically what that's suggesting to me is we're having the typical annual cooling off where buyers are not feeling as much pressure. A little surprising because DUI is still very aggressive, but the buyers the last 2 weeks have felt that they don't have to pay as much over asking price to get the property. Now we're looking at the sale price to list price distribution of each week, basically from September 12th, basically today, going back to May 1st. And then what else is on here is this dotted line here, the red dotted line that my cursor's on top of, is the best September we ever had, which was September of 2017. This is the best month regardless of when in the year it was, and that was April of 2018. And that's just to give you an upper bound of what these data points could be at. So I would never expect it to be above the dotted red line for September of past year, the best past September we ever had. Now, conversely, the blue lines are the worst September, which turns out to be September 2001. And then the dotted blue line is the worst month ever, which was December of 2001. And that was a reaction to the World Trade Center, plus the economy was turning down, because for those that have followed me for any length of time, know that I acted on the data I saw as early as January the 4th of 2001, telling sellers to get on the market because the market changed and was diving. So the market was already going down before World Trade Center. I know that's a controversial belief. A lot of people believe the economy was roaring. That's not what the data says. So what you do is you jump between the lines here. The dotted lines are the oldest, then the dashed lines are the next oldest, and the solid lines are the newest. The current line is the red line. And basically what you're seeing here is the red line is no longer improving, but it is basically packed right in there with the last several weeks. So the market, it was improving in the last several weeks, probably a little bit of regression this week, but it's still all in the same. So the market really is stabilized going forward. This just makes it a little clearer, the same concept, but now instead of going back to May 1st, we only go back to June 26th. You can see the red line being the current, and the same pattern. The dotted lines are the oldest, the dashed lines are the next, and the solid lines are the most current. This now is looking at what I call the micro market data, and we're looking at the biggest micro market that I follow, which is single family in Santa Clara County. Then this is just to sort of give us a benchmark. And basically the blue line is the inventory, the red line is the number of offers or the demand. So anytime demand is higher than the inventory or the supply, you have price increasing and you have a fast marketplace. So you can really see with shelter in place initially, the market went to a cool marketplace, a buyer's marketplace. But as soon as we could show properties again, it came racing back, and we're now back in a seller's marketplace like we were prior to shelter in place. Now you could argue that for part of prior to shelter in place, we were clearly in a seller's marketplace. But basically from the first of the year back until Thanksgiving, we were more in a balanced marketplace. And before Thanksgiving, we were pretty much back into a buyer's marketplace. Now this is looking at the days of unsold inventory in the blue data line here. So you can see it goes up. Everything in this red square is what I consider to be a hot seller's marketplace. And you can see the data has been trending down, which is sort of interesting that it's trending down at the same time that DUI is trending down at the same time that buyers are feeling less pressure. That doesn't typically happen, but remember the downward trend in sale price is lagging by the 5 weeks or 4.5 weeks that it takes to close an escrow. So they won't be synced up. So the downward pressure could have been right here when it was stable. Oh, I guess I didn't talk about the other two metrics. The fuchsia line down here is median days on the marketplace. Typically, the lower the number, the faster the marketplace. You can see we're right at 9 days now. We were at 10. Here is not an improving marketplace, but the result of the MLS freezing days on market during shelter in place. The gold line or the yellow line is average days on market, which is what most people quote. All three trend one another, but days unsold inventory is a more instantaneous change in the market, and it's a more dramatic change in the marketplace. So it's easier to see changes in the market using DUI versus average days or median days on the market. Median days to me is more significant because that says half the sellers are selling their property in 9 days, where the average is 20. So, if you're talking to someone and saying that the average home's on the market 20 days, that sounds like a much slower market than if you say half the homes sell in 9 days. This is sale price. Most people just follow the median, which is the middle mark, and you can see it's pretty stable, going slightly up. I also follow the lowest 10 percentile number, which is also going up. And I follow the highest 10 percentile, the 90 percentile in price, and it's also trending up. It has more fluctuation because the prices are just higher, but 80% of the homes are between here, which is 3 million, and down here it's somewhere around 800,000. So in that $2.2 million range is where 80% of the home transactions occur in Santa Clara County. I am just now noticing the data got truncated here, so we don't have the most current showing. So I apologize, and I'll look into that. And we have it truncated here too, but we got the important things, which is the data. And again, this is two different lines. This is the frequency of overbidding, and you can see back here, just prior to shelter in place, you had a large number of sellers getting more than their asking price, probably somewhere around 70%. Then it came back down to somewhere under 50%, and you can see it's back up to about 58. And this is the magnitude of overbidding. It was up here around 105%, came down to just about 100%. It's got up to just about 102%, and I think it's about 101.7% currently. This is just a little calculation that I did. I probably will drop it off now, but basically, this is estimating the number of the dollar volume of the transactions we lost in San Mateo County and Santa Clara County. Pretty straightforward. This is how many transactions of each type we had in the 5 years, so the 5-year median. And I said, basically assumed that's what we should have. We actually had this. So this is what percentage of transactions we lost, the number of transactions we lost, using the average price, which is in this column, multiplying those two numbers, you get to the total loss. So we lost about $4 billion. We are making some of that up about the last 4 weeks, so that number will go down a little bit, but it is a pretty significant loss. With that, that's the end of the weekly executive summary. I'll take questions on that. And if you haven't already known, my root URL here is up here. You get to the handout, but by adding the word handout in today's date. Here you'll get to the archive of this session. You can get to future presentations by using this URL. Does anyone have questions? And you can do interactive questions in this next portion if anything comes up. So now what we're doing is we're looking at the number of active offers, active listings without an offer. So this is what I call available inventory. This is an important distinction. Almost everybody else includes some of the pending transactions continue to show. That's ridiculous in my opinion, because buyers don't want to look at them. Most agents don't show them. So I look at just the available inventory. And there's at times of the year, most notably the first of the year, where the number of inventory is actually going, using my definition, is actually typically going down because buyers come out of the woodwork first. But if you're using the more common, including the ones with backup offers, that number's going up. If there is really less inventory for a buyer to pick from, the number should be going down. So I stick with this number. But again, the concept is the same that we saw in an earlier slide. Blue is the data. The gold is the 5-year median. The red is the ratio between the two. And you can see we're basically had, even through shelter in place with just a little perturbation, we basically had a very normal year. We had a bigger perturbation back here because the 49ers were in the Super Bowl. So, that puts it in some sort of perspective that the Super Bowl, being a local team, had a bigger impact than shelter in place as far as not the dollar impact on the marketplace, but the impact on how much inventory was available. Now you're looking at the number of new listings in just 1 week. So the concept is, again, exactly the same. The blue is the raw data for the given week. The gold is the historical. So you can see the drop down here we normally experience for Labor Day. Because of shelter in place, the drop down back here for July 4th was not as significant. And for Labor Day, it was even less significant. And that's to be expected because real estate's an optional event. If fewer people are traveling, more people are doing real estate. And so you don't have this large drop of new listings coming on the market. Same concept for new offers. The number doesn't drop down because buyers are still looking. But again, you can see that the red line up here is above the red horizontal. So we're having a little bit more transactions, and you can see that because the blue is above the gold. This 1 week is just a perturbation, but even back here leading into the holiday and back here when you were between the holidays, you can see the current year is doing better than the 5-year median. And again, that's really significant in my opinion because the 5-year median, they're all good years. Now you're looking at the number of closings. And again, the data back here is pretty accurate. The last 2 weeks is somewhat questionable because this is data I normally was not following historically. So the data I went and got historically was all plenty of time to report closings. The current 1-2 weeks, there's a lot of escrows that haven't been reported closed yet. So I am fudging the data for 2 weeks. Third week, I'm getting solid data and putting it there. I'm trying to estimate as accurately as I can what I think the number will turn out to be, so there isn't much movement. Then here's the number of expired listings. The important takeaway here is if you look at the raw count, you're talking about somewhere around 25, maybe on the high side, 30 listings. That's out of about 2,200 maybe. So it's not a huge percentage of the marketplace. And again, I think that part of the reason this is higher is when listings were withdrawn back here at shelter in place, they're now reaching their expiration date, and most of them will have reached it by now. And you can see these spikes are getting less significant. Going forward, we'll see closer to normal, and that's because the MLS, when a withdrawn listing hits their expiration date, counts it as a new expired listing. Moving on to cancellations, again, this is more accurate data because you don't have a canceled listing is a canceled listing. And so, you're basically pretty darn close to the norm. You can see you're fluctuating on both sides of the red line of the horizontal. And the number here is really not a large number, 60. So even if this was higher than normal, 60 listings out of 2,000 doesn't bother me, but it's very close to normal. So again, the market's responding normally. And then withdrawn listings, I have no historical data because, as I stated earlier, when a withdrawn listing hits their expiration date, the MLS counts it as an expired listing, no longer counts it as a withdrawn listing. So there's no way to go back and get historical data to compare this to the 5-year median. Now we're looking at the overbidding data, and this is the sale price to list price and the frequency, sort of an average of the two. So the red areas are red hot. The sort of uncolored areas here are actually balanced marketplaces. And this is going back to escrows that closed back on August the 15th, the week ending August the 15th. So that's going to be fairly historical data because not only are we going back 5 weeks, but you have a 30-day lapse to get the sale price. Stepping forward, you can see I've shaded in the gray areas and actually got them gray so they stand out a little bit better. Then here's the 28th. You can see South County went to a red hot marketplace. Here's the 4th last week. And going into the 5th, you can see Redwood City came back into a seller's marketplace. So a little bit of fluctuation, but overall pretty strongly in a seller's marketplace. My big takeaway on this is the expensive areas, the more convenient areas are not doing as well with shelter in place. Areas that are less convenient to commute to, like Saratoga, Los Gatos versus Los Altos and Palo Alto, South County versus Campbell, are doing the best they ever have in a long time. And I think that's because consumers are realizing they may not have to commute. And if they do have to commute, the commute's not as bad. So the premium for a convenient commute has decreased. The demand for those properties has decreased more than the price. And that's what's happened. Now we're going to shift to days of unsold inventory. Same concept. We're going back to August 22nd. And so this is real-time data as of August the 22nd. And again, this is my 5-week data, single family homes only. You can see there's a little bit of fluctuation, but not much. Whoops, that was the current one already. Got there real quick. The Atherton Menlo Park area looks like it's actually gone into a cool marketplace. Palo Alto is in a balanced marketplace. Everything else is red hot. This is a little bit of a complicated graph, but not too bad. You got 4 different columns. Each column has 3 subcolumns. So the first subcolumn is before shelter in place. The next column is the current. And the third column is whether the shift from before to current favors the buyer or the seller. And then the color coding of each column is based on what the conditions were before shelter in place. So looking at DUI, before shelter in place, single family homes was mostly in a seller's marketplace. In a condo townhouses, it was mostly a balanced place, market. Post shelter in place, i.e. right now, single family really hasn't changed much as far as everything's still in a seller's marketplace. Condos are clearly now even a little bit more in a neutral marketplace. The shift is more interesting. The shift has basically favored the seller in almost every area in Santa Clara County. You can see the exception. It's favoring the buyer in Los Altos and Palo Alto. And just to make it perfectly clear to everybody, the shift isn't much. They went from 37.5 days of unsold inventory to 40.9. So you're only talking a shift of just 3.4, I guess it would be the math if I'm doing it right, which, is 10%, so it's significant, but it's not huge. You go to San Mateo County, you got some sellers, you got the same here in the Bay Cities, and by the same, 26.3 to 25.5, that's darn close to the same. Redwood City is a little bit favoring the buyer because it went from 31.7 to 37.7, and the north area is favoring the buyer because it went from the 22.8 to 33.4. 34.4. So that's the concept here. You can see condos are favoring the buyer a little bit more. Some of them are favoring the seller, even though they're mostly in a balanced marketplace. The notable exception is the moderate low-priced areas in Santa Clara County, which would be like Santa Teresa, Blossom Valley, North Valley, and Milpitas. Same concept with overbidding. I won't go in as much detail. You can come back and look if you have any questions, but you can see the frequency of overbidding is favoring the buyer a little bit, especially in San Mateo County and in the condos. Single family, it's really still favoring the seller, except for your convenient areas in San Mateo County. The magnitude of overbidding is basically the same, and that's almost counterproductive or counterintuitive. But one of the things I have repetitively noticed is anytime the real estate market takes a hit, buyers are more conservative on how much they're willing to overbid, and that's the only reason I think these numbers are not mostly favoring the sellers. You can see the condos are favoring the buyer a little bit more, and then on price being up is favoring the seller in almost every category in single family, and in the condo townhouse it's sort of split, but there are some that are favoring the buyers, which means prices have declined. Now we're going to look at 11 different metrics. Each metric has 5 slides. We're going to concentrate on one of the slides in each metric. So here is days of unsold inventory in the 3 biggest micro markets, which are single family homes in Santa Clara County in red, San Mateo County single family homes in the gray line, and the yellow line is Santa Clara County condo townhouses. The big takeaway in my book is the condos went from the hottest marketplace to the slowest marketplace. Single family have basically come into the same ratio between each other and roughly at the same magnitude. San Mateo County is probably doing a little bit slower post shelter in place than they were before. Santa Clara County is probably a little bit hotter or the same. This is looking at median days on market, and again, this is not a rapidly improving marketplace. This was because the MLS froze data. It had zero. They weren't counting the days on market during shelter in place. So basically, when you look at this, the data from this point to the right is going to be meaningful, and from here to here is not meaningful, and from here backward, well, actually even here backwards really isn't that meaningful because they froze it, and so that's why it's stepping down. But again, the trend is roughly the same. It's a little bit slower, so homes are on the marketplace a little bit longer, basically 2 days in San Mateo and Santa Clara County. Condos and townhouses are probably about 5 days, maybe even 6 days slower. In the single family homes, I think that's a lot of people are doing sort of what I would do as a listing agent. Because of the inability to do open houses, I'm putting a listing on the market just a couple days longer before looking at offers to make sure I don't have people that want to get in and see it if they weren't able to. This is available inventory. Here we're looking at all the micro market areas. You can see they're pretty clustered. The goal was to have 200. You can see I'm now falling short on that, but that's just the change in the marketplace, and you have to do the best you can. Again, the 3 big ones are Santa Clara County single family homes, San Mateo County single family homes, and Santa Clara County condos. The trend is interesting in the fact that normally our peak marketplace is just around July the 19th. So here we normally going down. We've been basically flat. So that's basically a little bit of an indication that a few of the sellers that may have come on the market earlier this year that didn't are trickling onto the marketplace. Not in droves, not the large run-up that people were expecting, but enough that we're not really having a decline. And if you look at Santa Clara County, there is a little bit of a decline, but I think it's less significant than the typical decline would be. And July 19th, if I'm pulling it out correctly, would be right about here. And that is sort of the end of the peak. So even the end of the peak is the same. The other thing that's noteworthy is down here is the condo townhouses had a little bit fewer inventory than the single family homes in San Mateo County. Now you can see they have more, which again is an indication that the condo townhouse market is a little bit slower than the single family marketplace. Moving on to the offers in the past 5 weeks, you can see they're staying right up there. They're not dropping off because the number of offers isn't dropping off and inventory was dropping off on the little slide, even just a little bit. That's what's causing DUI to decrease. So, it looks like we're going to be in a hot marketplace into the fall. The closed number of transactions obviously is going to lag the number of sales. If it wasn't, that would mean you'd have a huge number of TFTs. For a while, I did think that might be happening. That was until I figured out that what was really happening was agents were 20% of the agents, 19% of the agents were late in reporting closings. So that's why I thought we might be having a higher TFT ratio, is that 19% late report. So once you take that into consideration, it's completely normal. Overbidding frequency, you can see the trend here. You were up quite a bit higher as a result of just prior to shelter in place. And I'm calling this prior to shelter in place because that's when the contracts were negotiated. So you have to back up the 30 days. So if you take March the 16th and move it forward to something like April the 18th, you're right here. And then you can see that the trend started coming down. So it's the lag time. But again, when you have somewhere between 50% and 60% of the sellers getting more than their asking price, you can't complain that we're in any sort of a slow marketplace. This is the magnitude of overbidding. So even though we're at the same frequency of overbidding, the magnitude was at 105.5%, 106% back here at shelter in place. Right now, we're only somewhere around 102%. And that would indicate that buyers are a little more conservative in how much they're willing to overbid, because the market's just as hot, but sellers are seeing a 2% overbidding now instead of a 6% overbidding. Here is sale price. You can see there's no drop at all in prices. For the most part, the trend is up. In this more expensive area, San Mateo County, there was a little bit of fluctuation. Just interesting to note. Here's some median price that most people follow. In San Mateo County, that fluctuation really doesn't go away, but there was sort of a dip, and that's far more pronounced than any other marketplace, which is interesting. I think it was real, but in hindsight, what I think actually was happening based on some anecdotal cases that I've heard about is I think actually before shelter in place, the Palo Alto, the San Mateo County areas was overinflated for the market conditions. So I think these numbers here are slightly artificially high, but then again, we're right back up to that level, which is now sort of shooting a hole in that theory. So that's one of the reasons I try to just report on what the marketplace is doing instead of understanding why. And then this is looking at the 90 percentile data. This is the top end. There's more fluctuation here, especially in San Mateo County, because you have homes that are $20 million and $5 million. So it doesn't take much. But again, you can see there's no downward pressure on price. There might have been right after shelter in place in San Mateo County, but even in Santa Clara County, it was basically flat. And we are up now higher than we were at shelter in place. So the trend is clearly in the upward direction. And even condos that was taking a hit earlier in this period of time is basically now back up to their peak levels. So, when I say they're taking a hit on days of unsold inventory, but they're really not taking a hit on price. Duration of escrow, really not much to talk about other than it is taking longer to close escrows. You can see San Mateo County was closing their typical escrow in 25 days, and they're now sitting here at 29 days. So, a slowdown 4 days, it really doesn't matter. I would actually like to see 5 weeks, because then you can plan a whole lot more, because you can recover for any hiccups. And if you get to the end and you're ahead of schedule, you just sit on it. So, but when you're working with a buyer, you do what the listing agent wants. This is the raw data as of September 12th of all the different micro markets. So you can go back and review whichever areas you're most interested in, whatever data set. Here is the August data. This is the past 20 years worth of data. This is the most current column, so you can see your median price, whatever metrics you want. You can see we're at 33.7 sales per day. And if you go back and look, that's one of the high time sales. We were selling more homes, but before 2007 meltdown, we were selling a lot more homes. These numbers are, 50 and 45 and things like that. And now you're at 35 and 33. And 33 is better than any of the years basically since 2014. So, you can't complain. Here's your overbidding at 102.3%. Median sale price is up. And that's, again, the same slide as before. And now here is the monthly data graphically. So this is on semi-log graph. So the slope of this line is the rate of appreciation. You can see that in 2019, the prices were basically flat. We've gone up a little bit in 20 despite the pandemic. You actually had a little bit of a downturn in price in the latter half of 2018. So, but the general trend in pricing is up. The most unusual year was 2017 because you went straight up, and that was because we had 2 appreciation years. Normally you have this trend of an upside down sine wave. You can see the basically a half a semicircle. And then in 2017, it was a straight line up. So 2018, we sort of made up for both semicircles. 2019 was basically a semicircle in half the year, flat. We started off good, and then we've been flat since shelter in place. Here is the more common way of looking at it, where it's on normal paper, but it's a lot harder because of the compounding of percent appreciation. These old lines were the 2002 peak pricing. So you can see that we're up quite a bit from them. I probably should come back and start plotting from the 2018 peak pricing, just so we can track that. This is, again, the overbidding. You have the same concept frequency, so you can see over time what it's done. So you can see in 2017, you were strong throughout the whole year. You didn't have this sort of downward slide every year that you normally have. Here's the 2018 huge downslide. 2019, the downslide. 2020 had the upslide, which you normally have. The downside is shelter in place, and then the recovery. This is the magnitude of overbidding, much tighter. You can see we're not going to be anywhere close to our record of 112%. We're down here about 102% of average overbid price amount. This is an advanced decline ratio of the stock market. The stock market does it based on actual number of units. I do it just doing a ratio, and ignore the straight back line. That just facilitates me doing the graph. So the data is sort of this curved jotted line down here, the curved jotted line down here. The straight back allows me to plot the data automatically. Here is days on sold inventory in the purple, in the blue, which is the most significant. You can see we spend very little time in a balanced marketplace. We've been basically in a seller's marketplace since January of 2012. You can see in the latter half of 2018 and most of 2019, we were in a balanced marketplace as well as a result of shelter in place. But now post shelter in place, we're right back to that strong seller's marketplace. The pink line is median days on the market, which to me is far more important. And again, this dip down here is because the MLS wasn't counting the data, so you have to ignore that, but I can't interrupt the graph. From this point on, it's probably accurate again. And then the yellow line is the average that most people quote. And again, I think telling people the median is far more significant than the average. This now is taking the average, the 12-month moving average. So for August data, I'm taking from August 2020 back through September of 2019, tracking that moving number against the actual raw data, the DUI, not average. So what you do on this is you look at something like the blue line here is inventory. You can see inventory has been dropping based on the past 12 months. So that's indicating that it's getting harder and harder to find properties. You can look at the number of closings, the gold line. It's basically stable and probably even upturning, which is encouraging that we're increasing after we had the hit with the shelter in place. The red line is the number of offers, and you can see the hit right during shelter in place as it came down, and then we're recovering and we're improving, so we're gaining back some of the stuff. Here is the overbidding, and now this is comparing the month of September. So I jumped ahead on here, and I think this is actually a wrong slide. So this is the weekly data for September of this year, and this is the slide we saw earlier. And then the rest is monthly data. So this allows you to see, since we're in September, and this is a September graph, that's why I'm comparing to September, but I shouldn't be having September data in the middle of my August data. So I apologize for that. But you can see the current week data is right there in where you'd expect it to be, sort of in the middle of the pack. And then this is an interesting thing that I think has some value. And basically what you do is you plot the 10 percentile price to the median and the 90 percentile to the median as a ratio. The median to itself is always 1. So as the lines right in this section got closer together right through here, you had price compression. As you had the mortgage meltdown, here the lines became further apart. You had price expansion. We had some price compression going on here, and it's sort of basically at an equilibrium recently. And that finishes me up, so I'll leave it up here to let you see how you get to next week's presentation. Is this URL here. You can see that the green is constant through all my URLs, so you don't have to write down each time to get today's handout. If you want the 110 slides, you add the word handout and the date 2020-09-12, and that will give you a PDF of these PowerPoints. Without the word handout, after I get this posted, you can get to the archive of this particular session. All my archives are just the root URL. With that, I will open it up to questions, and if I get no questions, I will end the meeting. So,
thank you.
You're welcome. Thanks for joining.
Yeah, thank you, Richard. Lots of data. I need to go back to it later and then look at them with more time. Yeah.